we have two interesting managements that we're going to speak to today. The first one is TD Power Systems, and to speak about this company and the recent order wins, we're joined by Mr. Nikhil Kumar, who's the Managing Director at TD Power Systems, who joins us now. Nikhil, welcome to the show. My first question to you is that recent order win on cards, I want to understand as to how this order win is going to aid your top line as well as your bottom line.
Yeah, so it's about 9.25 million USD, and we said deliveries will start from January 25 and go up to August 25. So it's going to be, we'll do say about one third of it in Q1, and then it'll go to FY26. It's a good order from a point of view. Of course, we've been working with this OEM for many years already. So, and we've been putting these products in the US market already for a few years. But it just shows that the particular sector, of this market is booming, and TTPS is a recipient of, that sudden spurt in orders in this particular segment, which also looks to be sustainable because a lot of these generators are going to go for powering up server farms, for artificial intelligence, and also for backup power. So we're very confident that this product is going to have a very sustainable outlook for the next few years.
Hi Nikhil, Anushi joining in. Now in FY24 you reported an order book of about 1,200 crore. I want to understand the execution timeline of your order book, like across your different segments, that's railways, exports and more. And also want to get a perspective on what is the order book going to look like in FY25.
So the order book for our generator business, taking as a railway business is about 400 crores of business order book, which will be executed partly this year and the next 3 years. And the remaining 800 crores approximately will be delivered between 3 months and 12 months from now. That's how the order book for TDPS is spread out. The order inflow for FY25, we are running at a run rate of about 290 to 300 crores per quarter right now. And we will sustain that rate for the next few quarters, and then we hope to increase that further to show the growth for our business performance for next year.
Right. So you're expecting oddly 1,200 crores of more orders in FY25. Is that correct? Yeah. Okay. So my next question to you is in terms of the breakup of this order book. We've been seeing that, both in terms of order book and revenue, from FY14 to FY24, your domestic has come down from 67 to 49%, whereas your exports have gone from 33% to 51%. So, your share of exports are gaining momentum. So going forward in FY25 and also from a longer term perspective, what is the kind of mix that you're aiming at? And, are these exports more margin accretive?
Yeah, so the company is going to focus on the export, continue to focus on the export market because we spend so much of time developing the export markets, and it's a huge opportunity for us internationally. We're not going to let go of that. So part of the company's focus is going to be to keep growing the export market because it provides stability. It provides, to a large extent, non-cyclical earnings. And we're then not so dependent on capex cycles that are there in India. So that export business is absolutely vital for the company for the long-term future. We'll continue to spend a lot of time in developing the export markets. But having said that, the domestic market is a very, very important part of our business. We are firmly entrenched in this home market, and the home market is very important to us. We expect the home market also now post-elections to keep growing. And we are excited about what the Indian economy has, in store for us for the next few years. That's what I see. I'm very optimistic about the both markets. And but of course, the export market for us has more verticals. We have gas turbines, gas generators. We have hydro. We have steam turbines. So we have more verticals in the export markets, and of course also the motor business. So we see more growth, more traction taking place for us for the long-term future from the export business.
All right, so export business continues to remain in focus. Now I want to shift focus towards the guidance side. Now there has been a consistent uptick in your margins that you've given, 17% that's what you clocked in FY24. I want to understand that even for FY25 you've given a strong commentary on the margin growth. Where is this growth coming in from the margin side, and also the revenue that you had guided for Q1, that was about 250 crore. Are we on track with this? So twofold question over here.
Yeah, so Q1, obviously, I cannot give you, I cannot give you the numbers. All I can say is that the company is very confident to maintain guidance, whatever it has given to the market in general. Coming to the margin growth, this year's margin growth will take place from operational leverage, mainly because we're going to be producing more from the same two plants that we have in Bangalore. And in addition to that, because of our increased volume, we're also seeing that there's going to be some small expansion in gross contribution because we've been buying better and we have more buying power, so able to get better discounts from our buying. We are not seeing any margin expansion taking place from price increases. I think price increases are not going to take place in the market at all. So this is really coming from our internal efforts to improve margins.
Okay, got it, Nikhil. So then I want to understand that considering all of these things that you've just mentioned, from that 17%, how much of an uptick are you expecting in FY25?
I can give you a range, right? I can't. I can say that we're 17% would be the bottom, and management is pushing. I mean, making efforts to cross 18.
Okay. Okay. And, in terms of your order book breakup, the focus remains on railways, and railway order book has been inflating. So going forward, what is the order book mix going to be like?
No, the order book for railways for TDPS is actually not growing. The order book for TDPS is for railways continues to be a single order from a major multinational company which is producing these freight locomotives in Madhepur. That order book is actually shrinking because every year we're producing around 100 to 125 crores from that order book. And it was 600, it became 500, now it's 400 something. So we have this year plus 3 more years to execute that. And then we have to find and we look for another contract to replace this contract, which the management is actively pursuing different opportunities. The main growth for us will continue to take place from our generator business and from our motor business in the foreseeable future.
All right, that's fair that you've mentioned about the generator business being in forefront. You are also making some capacity additions over the course. Now you're planning to set up a third unit facility. I want to understand what's the kind of capex that you're looking for in FY25, and given this capex that you're planning to set up, what's this for the new facility?
Basically, we're running out of capacity in our existing two plants. We are running at a very high capacity utilization level right now this year. The third plant, looking at the order inflow and looking at the business plan expansion, we need a third plant. The third plant is basically going to be around 120 crores of capex. We'll be doing a majority of it this year, part of it next year. And we plan to boost our capacity from 1,200 to 1,800, even close to 2,000 crores. And we will be ready for the growth in the market, basically.
Got it. And Nikhil, how do you plan to fund this capex?
Completely with internal accruals.
Okay. And, one question on the generator side of things, the total number of generator installed as of FY23 was around 521, which has come down to 496 in FY24. What could be the reason for this? In FY25, do you see an uptick or do you see a downward trend here?
No, the number of machines really is not a good indicator of the performance of the company, because we make machines from 5 megawatt to 200 megawatts. So we could have in a particular year, we're making a smaller number of larger machines, larger size generators. So we would have higher value, and obviously we would also consume more capacity making a larger generator, but the numbers would be smaller. So we don't look at that as really being an indicator of our performance. Please look at our top line.
All right, that's fair. Now I want to shift to something else. Now in your recent updates, you've mentioned about a strike notice, and again, you had said that there was a temporary injunction also which was in place, but still given that in the unit 1 and 2 we are seeing this strike by the work unit, want to understand what's the outlook there currently. Are we seeing any sort of an impact on our operations?
So there is a strike notice given, but there is no strike taken place so far, right? We are prepared. We have the injunction notice from the court. So we are allowed to run our operations unimpeded, and the unions are not allowed to impede either movement of materials or people. We have made alternative arrangements to run our plants. We are completely full in Q2. We have to run the plants. There's been no effect on performance in Q1. And my job and the job of my management team is to make sure we deliver our performance in Q2 and going forward too. The union, we have to find a solution with them, and we will look for finding a solution with them, constantly in discussions with them. Hopefully we should come to some resolution on this. Hopefully, but it takes two sides to clap hands, and they also need to come forward a little bit.
Absolutely. So, Nikhil, in the past 10 years, we've seen that the government has focused a lot when it comes to infrastructure, roadways and railways, right? And, I want to understand from you that what are the kind of budget expectations that you're expecting in this particular budget coming in July?
I think that, TDPS's business model is really dependent on CapEx from the private sector, and any budget, any government policies which would enhance or would stimulate the private sector investment in the country would be good for us. Part of our business comes from railways, so we would hope that the government fast tracks many of the projects which were in the pipeline, especially for the freight train locomotives, Vande Bharat trains. I'm sure they are all these things are going to come in our country, where we need this infrastructure. Is going to come. The government is, I'm sure, going to put all these actions in place. I'm very optimistic about the future for India.
All right. So now again, we are looking at this discussion on this, but also I want to understand more on the railway side. Again, you mentioned that there was a slight bit of a negative commentary coming in from you, but where can we see this turnaround? You're seeing that in the Asia, we are not seeing that kind of expectations. So what is going on there currently, and how are we able to, yes, also you mentioned about some of the contracts, your existing contracts are going to be shifted to some other businesses. So I just want to understand a tad bit of color on this segment.
You're talking about railway segment once again, right? Yeah, so part of the railway business in India is with the Indian Railways, and I said that there's a lot of pricing pressure in this particular segment, so we're staying away from this particular segment at the moment. But we are, our business plan, if you look at, let's say we've given a projection of 1,200 crores this year, around 100 crores will come from the railway business. So it's less than 10%. And the future growth of our business for next year also mainly will come from our generator business and the larger motor business not connected with railways. If new tenders are announced and if the railway business in India picks up, we are on standby, we have the products ready, we're waiting for something to happen. And once that happens, we'll get some more orders and we'll be able to show more growth. We're not depending on that. If it happens, it's great. That's how I like to put it.
Understood. And so, Nikhil, I also want to understand that, you are exploring opportunities when it comes to the oil and gas sector and also water utilities and other industrial applications. Give us some color as to what is the progress here, any kind of orders that you've already got.
Yeah. We have definitely got a lot of orders, especially in the motor business, in the oil and gas sector from the Middle East.
Yeah.
We have also got some very good breakthrough orders in the generator business from the Middle East. All oil and gas applications. So it's a big opportunity for TDPS. This year and next year, we'll be seeding the market with these so-called trial orders, and which the customers are given to us. Once we establish our product quality and credibility in those markets, this has a huge growth potential for TDPS, and we're very excited that we have these real super breakthrough orders with the best oil companies from the Middle East.
Got it.
I mean, the real who's who of the Middle East, we are working, we have these contracts with them.
Right. Okay. Right, Nikhil. Well, thank you so much, Nikhil, for giving us those insights on the companies. We
Thank you.
look forward to talk to you post the Q1 results.